All right. Hello, you trader nerds. Welcome into Sweet Bobby's world. We are trader nerds, and real traders never trade alone. They trade with friends. Thank you for being here. If you would like to purchase my spreadsheet, look in the comments below for a link. If you'd like to purchase my latest written trading plan, it is down in the link below as well. If you'd like to join our Discord, it's only like $19 or so a month. I try to make it like Netflix. If you were subscribing to Netflix, how much would you pay for that, and how much do you pay for Trader Nerds? And it's a good community. And Stacy's got her own little 25,000 account challenge in there. We got a lot of different other people doing different trades and stuff, so it's really good. And no a-holes allowed. We have already met our quota, and I am one of them. So that's the only rule: no a-holes allowed. All right, look at this, y'all. The market is up 0.63%. Y'all, get ready for the greatest bull market ever. I think that we're going to have this year. I think it's just going to be fantastic. I really, really do. I think here's the overnight high. We got 3,200 contracts trading. VIX down in the 12 handle. AD at a lofty 298. Cash open was here. We are up. But look at this. We're only tagging the upper 15-minute range. The reason I say that is when them saying that we might have 3 rate cuts this year, y'all, I don't see it happening, but I think the market has all that it needs. And if you'll remember yesterday, we were looking at the big green monster when we were right here, right? And I said, y'all, we are at the point of control. I said, we're definitely going here. And I said, I don't see anything bearish on this chart at all. And I still do not. We are overbought. So we may come back and test these levels and test this area here, but still very, very bullish in the chart. The point of control is here. We've got a gap open today. We'll fill in these at some point, but everything looks really, really bullish. Look at the linear regression. Linear regression looks really bullish as well. Let's say, here we go. We are in a bull market. Don't be fooled. We are in a bull market. This is where we allocate 50% of our capital. Why do we allocate 50% of our capital? Let me go through it again. The trading plan says if we are above the 200 daily moving average, which we are, ladies and gentlemen, then we can allocate up to 50% of our capital. If we go below the 200 daily moving average, then we scale back. We also look at the 10 versus the 20 weekly exponential moving average. The 10 is above the 20. Therefore, we are 50% invested. Okay. Everybody knows the rules. Everybody knows the game. Now, the market potentially could take us out at some point. We take on excessive risk in this market. But if you do not accept the risk, you cannot make a reward. So to make reward and to get enough money to go to Applebee's, then you, ladies and gentlemen, have to take risk. And everybody wants a riskless trade. There's no riskless trade. But the day is coming that we will have enough Sweet Bobby hedges. We will have enough Sweet Bobby hedges to fully protect our 111 and 112 portfolios. If you want to be perfectly hedged, you need 3 of these guys for every one of these. All right. Now, you just can't go out and buy 3 of these for every one of these, because you will, say it with me, lose money. You have to have the hedge on for free. All right. So let me tell you what the hedge is. Let's talk about the hedge a little bit, because I like to do more than trading. I like to do teaching. And so a lot of people want to learn about the hedge. And this was learned from a friend of mine who had taken Ron Bertino's course. This is not my original content, but I learned it from a friend. All right. And what the friend told me that Ron Bertino did, and I don't know what Ron Bertino does, but you can take his class if you'd like to see. But here's how I work it into my little scheme. So you initially buy 4 tranches to begin. All right. Now, what is your tranche size? I don't know, but from ours, it's just 1, 3, 5. So what you do is you sell 12 and you buy 20. So these are 3 5s, and that's 4 tranches. 4 times 3 is 12, and 4 times 5 is 20. And we do this in the E-minis. You can do it in SPX, you can do it in SPY, but I just like this. You can do it in micros if you'd like, but I like doing it in the E-minis. What account size does it make sense for you to do this on? Well, I think I've done these 12 and 20 on a $25,000 account, haven't I? And I think that's fine. It's going to cost you about $1,100 to $1,200 to put this initial hedge on. Okay. And what you do is you sell the put that is closest to $3 at 120 days. All right. You sell that put, and then you buy the put that is 50 points below it. But you sell 12 of these and you buy 20 of these. All right. So the initial cost is going to be about $1,100. Then what you do is you wait for 2 consecutive down days in the market, or one down day, we don't have them much, of 0.4% or less or more. Sorry, 0.4% down or greater. And then you sell another 3. How much do you collect for? Closest to $3. Everybody with me? You sell 3 puts at $3. Where? 60 DTE or greater. If you want to go back to that 120 days, you can do that. But you just want to make sure that they're 60 DTEs or greater. And then what you do is you put in a GTC order to buy 5 puts, 50 points below the shorts, right? At a price that is a break even. And then you use our little calculator to do that. We got a little calculator in our spreadsheet that you can purchase, and it's got the little calculator in there. And you can say, well, if I sold it for $3.05 and I harvest those for 20 cents, how much do I have to buy the puts for? So really, really, really easy to do. So here, let's sit here and now let's tell you why I'm talking about the Black Swan or the Sweet Bobby hedge today, is because we had some hedges go off today. And you need to watch it on every day. You need to check your account. So let's look at this is the account that is the Roth IRA that we traded yesterday. And it looks like there's no filled orders in this one today. Nothing filled. But I got an indication that something filled in the IRA today. Let's see what filled. Oh my gosh, look at this. Waka, 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 waka. So we have now, y'all, we have 3 5s that have, so that's 15, y'all. Everybody got me? We had 15 of these things filled where we bought the 5 that is perfectly at a break even now. So these are 3 or 34.50, 34.50, 34.50, and we bought them all for $1.60. So let's go look at that. So let's say, make sure this is in the IRA account. So let me close the Roth IRA here. And let's see if we can find these 34.50s in the IRA account. So let me show you how to do this. So if you want to just show your open positions on the spreadsheet, go to the exit, and then just look at the blank ones. Check the blanks, and that'll just bring up your open positions. And then I want to just show, well, I wanted to show you this. Let's show strategy. And I wanted to do strategies, just show you the long hedges and the short hedges. There we go. So this is my Black Swan hedge campaign that I've got going on. And we just said that we bought the 34.50s. All right, here it is, 9.15. You see this? So what we did is we just bought 15 here for a break even. So this is 3 tranches. See, we sold 9, right? And we bought 15. So if we sold 3 tranches at 305, let me go to the calculator for you. We sold 3 tranches at 305, and we bought these for $1.60, and we're going to harvest the shorts at 20 cents. This entire trade, y'all, I cannot lose on it. Well, I could lose on it if I can't harvest at 20 cents. But the cool thing is, look at this, y'all. We're going to make a total of $22.44 on a free hedge. And there is a great probability that I'm going to be able to harvest those shorts at 20 cents. When do you harvest the shorts? You harvest the shorts when they get down to 21 days, or definitely by 14 days. Okay. So we're going to make a profit on this trade if I can harvest at 20 cents of $22.44. So let's go back and let's put this trade in. So we said we bought the 3450s, 15 of them, and we did so in current days in trade. Are you kidding me? This thing still got 71 days to go and we are fully hedged. Are you kidding? That is incredible, y'all. So let's go and now go back and show so I can put all of my stuff in here. Let's go to strategy and let's show them all now. There we go. So it's got 71 days. So this is in the E-minis and we bought 15 and we'll call this BSH6 because it goes with those shorts, right? BSH6 or Sweet Bobby Hedge 6, 3450s puts. These are the long hedge at 71 days. And we entered those on 3/21/24. And we got into them for $1.60. Look at that, y'all. So, I mean, it's so cool. Look, we sold these puts for $13.56.12. And we bought the loans for $1,227. That is amazing. That is just amazing. So let's go and put those in their little category. Now, here's the good thing, though. Watch what I'm fixing to do now. Y'all will like this. Let's go put them in their little groups, first of all. So let's go over here and let's show our groups. And let's BSH6 is there. So we've got these things here. These 15 go into BSH6, move to group, BSH6. All right. And let's see, that's all there. What else do we have? Unallocated. That's all that's unallocated. All right. So let's go look at those BSH6. All right. So here's BSH6. We've got 9 and 15. And let's analyze the trade. Analyze closing trade. No, I don't want to analyze closing trade. I want to do the analyze trade. Let's see. Move group. That's fine. Let's go over here. Let's go to the analyze tab. Let's go to the ES and just see what a big, humongous hedge that we've got here. So we've got ES and let's see, risk profile. Started to say something didn't look quite right. And let's go hide simulation. So we're only looking at our 9 and 15. There they are. So let's uncheck everything and let's just look at these hedges. 9 and 15. All right, this is it. Beautiful. Look at this, ladies and gentlemen. Oh, is she gorgeous? So it says here that on these 9 and 15, if we get a 20% move to the downside, our profit and loss on these trades will be $9,683. However, that does not take into effect what volatility would do if we went down, if we went up 10% volatility to where the VIX was roughly at 52. Look at this, y'all. We would be making just on this trade $64,850 or $64,957. Look at that. That's beautiful. What a beautiful hedge. And we got it for free. We got it for free. Now, this account is pretty easy because we trade only micros in the 111. So anything that we have that is ES is our what do you call it? Let's do this. Let's do single symbol and just look at our ES trades now. So let's close all of our ES trades. Look at this. Now we look and we sit there and say, wow, look at this. Our hedges that we have on give us, look at the numbers down here, on a 20% drop, ladies and gentlemen, we have a $151,000 hedge. It's beautiful. Now, since we bought 15 today, I would suspect that we could go. Now, here's what you can do. And here's why I go ahead and do it, because I'll forget. I will forget, or make you a note on a Post-it note or something and figure out, hey, how do I know when to sell my next puts? I just go ahead and sell them. I just do it today. Now, it probably is better if I wait for a pullback. I admit that, but I just want to keep this thing going. It's like the sourdough starter in your refrigerator that you do with your bread. You got to feed this thing every day. And so it's time to feed it. So let's look and see. Let's remove any simulations that we have out there. And let's see what it would look like now if we were to sell 9, okay? So let's go to Trade tab. Now, remember, where do you want to sell them? Well, I would want to sell them anywhere over 60 days. So we could sell them 71, 92. How about this 92? We don't have anything in there. Let's go over here. And how do you set it up? You sell something closest to $3, right? So that would be these 35.50s. What would happen if we sold 9 of these? 5, 6, 7, 8, 9. That may be too many. We'll see. All right, we'll sell 9 of these. So we'll analyze the trade. Okay. Now let's look at what this would do for us. Change this to ES and show all. Let's say show all. Okay. And then make sure I got everything show all. Got all those. I got my 9 there. Look at this, y'all. Look at this. Now, is it going to be 150? No. It's going to say that if we go down 20%, look at this. It's only going to cost us $2,200 in buying power. Our net lick is going to be $75,495. Look, just on these hedges, they're going to be up $558. But if you put in the volatility, instead of being up 115,000, you're going to be at 14,490. Everybody with me? So what I think I'll do, this is what I'm thinking I'll do. I think I want more protection than that, right? I want a little more protection than that. That's not enough, especially when you look at your entire portfolio. Let's see if we can do the entire portfolio. Portfolio beta weighted. Let's see, show all. Let's see, we want all of our MES positions. Make sure there's no simulations in here. Aha, I've got to take these out. Hold on a second, y'all. Y'all bear with me. Okay. So we got to check all of those. So we got all those MES checks. We got all of those checked. We got those checked. There's our simulation. Now let's just see how bad it is. Look at there. Market goes down. It says we're down $50,000. That ain't good. It says our net lick theoretically would be 75,000. But if we figure in the amount of this isn't good. Look, see, we're down 126,000. You're going, oh my God, you don't have a hedge, Bobby. Exactly, we don't. But remember, the goal. What is the goal? Is to grow this as much as we possibly can. So what we'll probably do is if that 156 is a little too much for you, right? If you sit there and go, man, that'll blow me out, then maybe you sit there and you go, well, how about let's do it this way? Let's do 6 of those and make it a little more palatable for us. Now you got something kicking. Now you got something that looks like this. Look, kind of an inverted, and it starts kicking up if you go back here, right? All right. So now you got something that looks like down $74,000 to $80,000. Okay, that's kind of cool, right? It's now imagine this account is what? I think this account is, I don't know, 50,000. Let's see what's in this account. IRA, we are at 72,000. So you got to remember that, am I taking risk? Could I blow out my account on a 20% down move? I absolutely could. But there are things that I will do to prevent that before we're down an immediate 20%. That's what I'm banking on. Bobby, are you sure you can get them in there? I'm pretty darn confident. All right. I'm pretty darn confident. But if you don't want that risk, then you could say, okay, well, let's do this. How about what if we did 3 of those? Now, Things are starting to look better, right? Now it says your net lick on a $70,000 account, if you go down 20%, is 92,000. Wait a minute. What is that? Why does it say 92? It should be less than that. Anyway, I don't know about that theoretical net lick thing. That's a new thing they put on us here. Now you go down and you say, now, wait a minute. Now I'm only down $34,000. Hey, that ain't bad on a 20% down move. Y'all, this is what being fully hedged is. I could recover from a $30,000 loss. Everybody with me on that? You can recover from that loss. It's not going to blow you out. Now, I am going to be a little riskier. Now, some of you who watch this video later on will say, Bobby, you are the most idiotic person on the planet. And while that may be, I am going to beef this up a little bit on my belief that I can do something before I blow up. Okay. Am I going to do 9 today? No, not going to do 9. I'm going to do 6 today. I think it's the prudent thing to do. It's kind of the thing between being fully risk free and not fully risk free. Now, what you could do is this. What if you did 0 of these? What's this? Look at this. I don't have to do anything. I am fully hedged to the downside if I don't do anything. Now, that's where we're going to be eventually, but we've got to continue putting these things on to build ourselves up. But the one day, let me tell you what it's going to look like one day. One day, this thing's going to be up here, and we're just going to be peeled with 1-1-2 trades, and we're going to be keeping doing our 1-1-2s, and we're going to do our 1-1-2s, and we're going to keep doing our 1-1-2s, and we're going to be fully hedged to the downside. That is my goal. The day is going to come when I'm going to be selling $300 $3 puts, and I'm going to be buying 550 points below it. But I'm not there yet. So if I just want to say, well, screw that, let's just stay fully, and now you go, okay, come get me and let me make $10,000 on a 20% down move. But I'm going to continue building the wall. I'm going to do what Donald Trump could not. I am going to put on the wall. So let's go back here. 2, 3, right? 4, 5, 6. We're kind of meeting in the middle. All right. So let's see if this is still going for 305. Let's see if I can get 310 out of it. So here we go. So let's sell 6, create, confirm, and send. And send, bring in $900. There we go. So we sold those at, let's see, we sold 9 3550s at 92 days. Y'all remember that? 3550s, 92 days. How many did I do? 6. So let's go put them in our spreadsheet, trade. So we got ES. We sold 6. And we'll call this BSH 8 and 3350s, puts, short hedge, 92 days, control your colon, and then it is, the price was 310, right? There we go. All right, so I sold those for 310. Let's put in them our handy dandy calculator. If you sell them for 310 and 310, and I harvest them for 20, I've got to sell them for $1.66 to break even. So I think I'm going to put them in for $1.55. $1.55 will make me, let's see, this is 2 tranches, will make me $54. Now, what is happening is, remember, I initially put on these trades that cost me $1,100 when I bought the 4 tranches. But nickel by nickel and dime by dime, I am making that money back so that all of my hedges to the downside are free. It's having your homeowner's insurance for free. It's having your life insurance for free. It's having your health insurance for free. That's what we're doing. That's the beauty of the Sweet Bobby hedge. Okay. So then what you do is after we put that in, right, we put those 6 in, what we want to do is we want to come back and we want to put a GTC order to close these, right? So create a closing order and we want to close these for 20 cents. And we want to do it on a GTC order and confirm and send. All right. So since we've got 2 tranches here, we want to buy 10, which is 2 tranches, 2, 3, 4, 5, 6, 7, 8, 9, 10 at $1.55. And make sure that you put in that this is a GTC order and confirm and send. All right. That's how you do it. That is the beauty of the Sweet Bobby Hedge. Thank you. Thank you very much.